Hi there, welcome to Wyckoff Technical Analysis session for VeChain. If you're new to my sessions, here are the 3 key takeaways you can expect from my sessions. So let's start with the weekly chart of VeChain. Previously we talked about, there's 45% chance for the price to come down to show us a spring, meaning a lower point than the selling climax itself. We've seen the selling climax back in April and another test back in June. Now, the price has come down for a deeper test. The other 20% went to potential horizontal trading movements, but this week's early move confirmed that the price seek lower level than the red key level of 1 cent 50. So this is basically done. Well, I wouldn't say done. Let's put it this way. The spring is now confirmed, so this is 100%. That's confirmed. The question mark remains where it is going to end up at, because we have drawn this yellow dashed line over here. That's where the October 10th event reached. And if we look across, it's understandable because there was a dip back in 2020, same month, November. Actually, it touched on that line during October 2 times, and then eventually get even lower during November, beginning of November. So very similar timing after 5 years. And also here there were some peaks pointing towards this level. So it's a considerably stronger support level after the red key level over here. There are some intermediate levels. The one across here where our price of VeChain is very near. So this may not be clear to you if you're watching on a mobile device, so I am going to enlarge it. Why I'm putting this line here. Alright, so the principle I have is to have as much candlesticks as possible, whether it's their tails, their heads, or the tip of their wicks. So those are the areas in the past that found support or resistance. So that's why I'm putting the line here. You don't need to be like to the decimal, that kind of exact, because it's a range. You see the candlestick, they never... You see sometimes there's a cross, but there's very few occasions like that. They usually have a range. So your line isn't just one price point, it's a range that, what's going to happen is going to end up near or around that line. So you see what's going on this week. This week ended up at that line, exactly like where it happened back in 2023 during the spring, as well as the previous periods. So, okay, so that's where we get the reference. And now, that's where, our question is the spring going to end here? Meaning it's going to be very similar to what happened in June 2023, or is it going to come even further down? Because this downtrend box, I'm going to adjust it when we get to the daily chart. Currently, I'll just quickly get rid of it from the weekly chart, so it's not blocking our view. When we get to the daily, we'll get to see we have to make some adjustments. So, what's next then in terms of Wyckoff? This sign of strength is where we hope to see, but as of now, it's still of lower possibility. The 65% goes back to here, where we'll see potentially after the rebound there will be still some more tests, maybe around the 0.018 level, but it's too early to tell. There are two resistant lines, the 0.015 and 0.018, for that to go through before we can trade within this range between the white dash line and the orange key level of 0.026 again. Okay, and also checking the Bollinger Band and Keltner squeeze. This indicator tells us after a squeeze, usually a bigger price swing will happen. Sometimes it starts towards the downside first, sometimes it starts towards the upside. So to use this indicator, remember, it only tells us fluctuations are coming. Bigger fluctuations than the period during the squeeze. It doesn't tell us which side the fluctuation will begin first. Okay, keep that in mind. It's a free indicator, BB code now. But when you use it, don't misunderstood that it's always going to go up first. It's not like that. So while we're talking about this, let's check the daily chart as well. So the squeeze continues because in the daily, other than October 10th, you see every day is a pretty narrow range. There were periods during July that we've got bigger price movements, but then when we get into August, September, and eventually in October and now, you see the candlesticks get smaller and smaller. So while we are still within the squeeze, we see in the weekly chart the biggest swing is already on the way. So daily we can only follow. And then the adjustments we have to make, after the breakout from this wedge we talked about last week, we can remove all these lines now because it just looked too busy and we have passed that point already. So what I'm going to do is adjust this channel box because the rate of decline with the recent week of price development, it looks to me it's a little bit more gradual than the original rate of decline. So what we need to do is to just lightly adjust this. Again, the principle is for the channel box ceiling and bottom to bracket the wicks of the candles. Other than the one, that's my approach. Some people would include this. For me, I don't include outlier, like single day outlier events. Sometimes is because of people panicking. Sometimes is probably just fat finger. So that's why I'm excluding that. But excluding that from your channel box doesn't mean you have to exclude that from your consideration where the low would go or can go to. This indicated to us the low can actually get to somewhere near the second yellow dashed line. So here, this is actually where the spring is heading to. Okay, so it has been confirmed that we are in the spring, so that's why there's no percentage, no question mark here, because last week we already confirmed that we are in a spring situation. Now that the spring is further developing to a lower point, that's the difference. Alright, so just to check what I have put here, 65, 35, so yeah, those two are aligned. And just looking at the time point of potential breakout, this yellow dashed line over here that we have drawn from the previous low in 2023 June and also this period is indicating to us that the ceiling of the downward channel is crossing this line somewhere near November 13th, so a little bit more than 1 week from now. And when we get closer to that date, if the price continues to trade within this triangle, that's where a potential breakout is going to happen. If it breaks to the upside, that means we have to adjust the box potentially again. It becomes less likely when we have more and more reference points. Okay, so the channel is probably set after we have like 4 or 5 reference points. If it really breaks out, it can signal a change in trend. So we're no longer within this downward channel, and it may develop something horizontal, but what comes after could be a continuous downtrend again, or it's going to eventually break above the red key level of around 1 cent 50. So that's a trend change breakout. If it breaks the yellow dashed line, that means it's going to continue within the trend that we already know the price has been traveling along since mid-September. Okay, it started dropping from mid-September, and then over the past 2 months we have been in this same trend. Okay, so that's not a surprise if it breaks towards the downside. Okay, only when it breaks outside of this box, that means a potential trend change event is coming. And another time point after November 13th is 10 days later, November 23rd. So anytime before those dates from today, a breakout can happen. It can move earlier than that date. Like last week, we talked about this November 7th. And what happened was, yesterday you can still argue it stayed above the red key level. But today, it definitely is clear that it is staying inside. There's still 6 hours and 20 minutes left for this candle to revive to that position. But I would consider that the breakout that we talked about last week has happened. And it's, like I said, it's still within this trend, so not a surprise. So you can just consider a trend changing event hasn't happened. Okay, but the time points are these dates. So let me see what I have potentially missed. We've talked about the Wyckoff stages, we've talked about the time points, and we have talked about these levels that we borrow from the longer history back in 2020. Hey, hi Cuckoo. Thank you. Thanks for your support. And yep, just back to the weekly chart, and just to recap, the spring is still being developed. So last time, the spring in 2023 summer ended up, the low point, not the close of candles. The low point ended up around this yellow dashed line level at around 1 cent 30, and now we are already at that point. So is the spring going to end here, or is it going to go further down at a level where the October 10th event has shown us? That's a level at around 0.0095. That's way back to 2020, that low point. So when you hear people saying, the world is different, a lot of money has been printed, or the interest rates are different, the price of crypto won't go back to like 5 years ago. October 10th has proved to us that it can. So be really careful. Bitcoin is a bit different, I can say. But other altcoins, they are, like I said, startups. And they can go, disappear. No matter how much we love the project. If there's no adoption, no funding, they are just going to run out. They are just going to close their business. It's unfortunate fact that we have to accept. It's a risk there. Okay. Thanks for joining me in this session. See you in the next session.